Hi everyone, I am Gauri Das and I welcome you to this chat show, Factoring, a one stop solution for your global aspiration. And let me tell you about India Factoring first. India Factoring offers working capital solutions through the factoring product, aimed at converting your receivables into cash. The company is a subsidiary of a European bank, FimBank PLC Malta, and is registered with RBI as NBFC Factor. India Factoring is also 83 category authorized dealer. Through our global network, we offer one-stop solutions around receivable finance. Today, we have a very senior banker and factoring professional with us who would guide us on various aspects of working capital solutions. This professional today, his name is Parmanandan. He is a senior seasoned banking professional with more than 20 years of work experience. He has comprehensive experience in different roles across retail assets, SME, and corporate business divisions of leading banks. A veteran in working capital facilities with thorough knowledge in all working capital products. He has been recognized as a dependable business leader with good problem solving skills and expertise in maximizing resources and has exceptional ability to motivate and encourage people around him. Please welcome Parmanandan. Hi Param, thank you so much for joining us.
Hi, Gauri. Thank you so much. Indeed, it is a pleasure to part in this chat show, and of course, it is a great platform for us to interact with the people. And thank you for this opportunity to be part of this chat show. Yeah.
Thank you, Param. And yes, you rightly said. So we would like to understand from our viewers where are they joining from, and they can put in their comments, questions, thoughts also, which we will be displaying here.
Yeah.
So, Param, before we enter into this working capital discussion and we talk about how you would suggest and what are your suggestions, let us take a minute. And like I said, that you have more than 2 decades of experience into working capital solutions and many other things. I would love to understand from you one lesson that has shaped you, the person who you are today. I'm sure it would be very beneficial for our listeners to understand what can be a perspective from a 2 decades experienced professional. So could you please share one such story or instance which has shaped you the person you are today?
Yeah, that is great. In fact, we all have such type of lot of such experience in all our careers, especially in our professional careers. So for me, I was actually fortunate to have some early realization in my finance industry career. So this incident, actually, I would like to share that small incident. This incident happened during my initial first finance industry career way back 98, 99. That time I was working for an NBFC, and the finance industry NBFC itself was a very less, and getting loan opportunities very difficult. So that point of time I was working in an NBFC and taking care of CV business. So as part of my routine activities, I disbursed a specific loan for a transport contractor. And so after that, it was gone. And after a few days, the client came to my office, and he was so happy. And he told he could able to take delivery of vehicles on time, and he appreciated all our support for the faster approval. And at that point of time, of course, finance, getting finance and other things was not that much easy, and very limited players was there. And after this chat, he took a bundle of notes and kept it in my table. So I really embraced what to do. Oh, I have totally embraced, and I never expected that type of gesture from the client. Then client told, this is a small token of my appreciation. The way you people are supported, it was really helped me. All these blah blah, all these things. He told. Then I was actually totally impressed. I don't know that it is in my young age, and I was seeing that type of thing first time in my life. and it's more. It will be more than my salary also. The bundle will be more than my monthly salary amount. So I politely, somewhat convinced the client to take back that money. Fortunately, he accepted and agreed my things. But I have seen from bottom of his heart, he really appreciated my character. So that point actually I have really thrilled. The person who is first time appreciating your character and values, that actually boosted my moral. Of course, I able to win the client for quite long period, and he continues to take all the loans from me. More than that, of late I realized that that incident actually helped me to shape my entire what I say, my values, my principles. More than that, the attitude and to develop my character. And we all knows that in finance industry, that attitude having not the integrity having the more value. In fact, I always cherish that moment because that initial incident actually helped me to groom my character and stick on my integrity as well as to stick on my values and principles. So that incident always I'll cherish. Yeah.
Wow, Param, thank you so much for sharing. So, what I'm hearing here is it's all about values. Maybe the client was testing you, and had you not done the way you kept your integrity, the result would be different. Maybe you would even lose the client and you will lose your character. So, it's a very important lesson. And thank you for taking us to yesterday's where people would kind of bribe you for taking loans. No longer such things exist now, but yes, it's very good lesson because it might happen any point of time. It may not be cash today, but it can be something else. So thanks for being that guiding light, Param. And Param, you are joining from Chennai, and I know you have a very long career in southern market. And Chennai as a city, I love it. Not just because I'm a vegetarian and I love that Sarvana Bhavan and ABCD, but there are so many other things about the city. The whole southern part is plays a very important role when it comes to exports, when it comes to overall business in the country, overall GDP. There are so many brackets, so many areas in southern part of India which play a very important role. Like Tirupur, these places are known for export. So, what changes are you seeing in last 18 months? What has changed when it comes to doing business in South? It's not only about Chennai or Tamil Nadu, but the whole southern part of India. What has changed in terms of interacting with people, doing business, and so many other stuff?
Yeah, of course, it was a little bit challenging period for all of us initial 16, last 16 months of this COVID period. But fortunately, if you compare to other metros, Chennai, we have not faced much issues, and fortunately, the government able to manage the entire situation with less panic way. So overall, it was compared to metros, it was far better managed. That is a good point. And you very well you said the south market is a very matured market where you have multiple industrial clusters. So if you take Chennai itself, it is the biggest automobile hub where all the biggest automobile manufacturing units having plants. And if you take Tirupur, it is a concentrated garment market. And Hyderabad, if you take, is a concentrated pharma market. Electronics markets are there. It was a concentrated market. And my experience, more or less, the South clients are always disciplined, and they are very conservative in their way of approach in business. Of course, their conservativeness helped them to help them during these tougher time. And business, of course, business industrial activities was not affected much in the COVID period. Initial time, first phase of time, some challenges they faced. After that, it has bounced back very well, especially in electronics, engineering, all this area, it has, pharma, all this area literally grown during the pandemic period. Now that garment industry and Other small scale industries also started picking up. Now business activities are all intact, and fortunately, because of the discipline and other things, I feel that overall the stress level in financial industry in south market is less, so that also helped. So more or less it is good during that such type of unexpected situation. People were able to manage and their show very well, and people are easily able to adopt the new situations, and without hurting the business activities. Everything is as back to normal, and Chennai is perfectly back to normal. You won't see, you will surprise whether such type of COVID scenario is prevailing in Chennai.
Thanks for sharing that, Param. And I'm aware that the financial discipline, it's very high when it comes to South. And yes, adaptability also. We heard reports that, and you also shared with us that many clients or people known to them have ventured into a different manufacturing, a different thing, say mask, if clothes were not being manufactured at that point of time. So yes, adaptability and discipline is hallmark of South and Southern market. So now I'm sure, as a working capital expert, you must be wanting to talk something about working capital. So here is what I would not want to know from you. What has changed when it comes to working capital solution? What has been a downside because of COVID? Like you mentioned something related to trust or a few more things. And what has been upside? Is there anything positive when it comes to working capital solution in past 18 months? What is your take on that?
Yeah. So working capital overall, it is actually a very interesting topic for me, since I have worked in that almost. Fortunately, I got opportunity to work across almost all working capital product in my banking career. So as far as working capital concerned, it is all about how the business people is managing their current asset and current liabilities. Of course, it is helping their liquidity position. But in India, if you take majorly business people were depending on the traditional way of working capital facility, where the normal cash credit facilities or overdraft facility they will avail from their banker, and they were comfortable for using that. So predominantly people were more or less in a comfort zone on a traditional product. Though there was multiple option come up, most of the people has not explored. But during the pandemic, they really understood that in addition to this traditional way, there are a lot of other unique product available in working capital spectrum, and they want to explore that. And they, most of them, understood the most important benefit of such a product, especially the product what we handle, the factoring product. So earlier, though people knows, they have not explored much that product, and they have not understood the exact benefit of that. They thought that it is alternative working capital arrangement, they will get some cash flow. That was the major the belief of major understanding of major chunk of business class. So the pandemic situation, they have understood the importance of credit risk, buyer's risk, the uncertainty market. They want to protect their credit risk. This awareness has gone up. And they were, if you ask me, that initial time of that COVID period, the inquiry level for factoring has actually pumping. All area we were getting called for a factoring product. They want immediately secure their international receivables, all these type of things. So as far as working capital, overall working capital business concerned, this pandemic, it has opened up new learning for the business people. They understood there are multiple unique products available in addition to the traditional way of finance. And of course, the receivable finance is the most secured and most proven product for them to relay for encashing their own business resources. So this type of realization, it has really come to the mind of business people. So overall, the pandemic level, the working capital requirement has, of course, because of some uncertain scenario, the working capital demand for all the business unit has gone up. So they got some support from government in the way of COVID loan and some top up of existing working capital. In addition to that, they have lined up various type of arrangement. So that especially for our product, factoring product, initial time the awareness was less, but the COVID scenario, most of the people understood the benefit of factoring product. That is one of the great thing I have noticed.
Yes, Param, I fully agree, and I'm relating it to one such learning in my life. Before this pandemic hit, I was someone who would not look at buying online. So online shopping was a total no-no for me because there's no that touch and feel. But when pandemic hit, there was no other option. And now I have kind of got some excellent services from few website, and I would not be wanting to venture back to the old things, the old way of buying and going out there and spending whole day to buy few things. It has become so easy. So like you also said that it's a kind of awareness on risk mitigation. It's awareness that there are other options out there which are maybe much better than what you were availing so far, depending on the situation that you are in. So yeah, businesses and individual alike, Param, this understanding has set in, and I'm sure it's going to open up many more new ways of doing things like it has done for me. So thanks for responding to this. And I would now like to talk about the insurance, the new announcement from IRDA. They have issued a new credit insurance guideline. This guideline, as we know, it aims to improve economic stability and address trade loss, like you discussed, Param, credit risk due to payment risk. So this addresses the trade loss due to payment risk. Now, it is a very welcome step, but how do you see it's helping businesses? How do you see it's making an impact on overall business scenario of the country, Param?
Gauri, it is an interesting topic again. Before going to the answer, I would like to actually highlight we India Factoring got a good opportunity, especially for participating in the IRDA's finalization of guideline process. So we attended the IRDA's one of the IRDA committees, one of the meeting, and we were able to share that our understanding on factoring product, and we able to share our understanding on various receivable finance. So it was actually fortunate we are also part of that. We got some opportunity to participate in that guideline process. So we knows that the entire process of how the guideline was working, and they took some opinion from us also. Final draft, all peoples, they have taken feedback. We were able to contribute very well in that particular exercise. So of course that credit insurance, some touch of India Factoring also is there in that entire credit insurance policy. Of course, we all knows that in especially in factoring business, it has started way back 1990 in India, but it has never took off as like the in global market. The main reason was two reasons. Of course, the big main reason was non-availability of credit protection. That is the key requirement for a factoring product of or a receivable finance. So that lack of that was actually stopped the growth of factoring and receivable finance in India. Of course, second, there was not much robust regulatory support. Now, fortunately, we have trade credit insurance. It has finalized and it has rolled out. Of course, it will take some more time to get the final policy from the insurers. It will take some more time. But and adding to that, the Factoring Regulation Act 2011, 2021, that also add more value for India's overall receivable finance. So it is definitely a game changer, and especially for SME client and medium clients. So the availability of finance will be gone up, and they will get multiple options for securing their receivables and availing receivable finance and factoring product from various players. And if you take the present scenario, none of the SME clients never experienced any credit protection for their receivable in India. So this is the, if you take global market, it is the basic things happening for receivable finance. Now they are going to experience the real advantage of receivable finance and factoring product. Especially, I'm talking about domestic factoring. Of course, in international factoring, there are credit protection available. Present scenario also not from India, but from international market, it is available. But in domestic market, it will be totally a game changer for the SME client, mid corporate, certain extent corporate client, as well as for all the factoring companies and the financial institution who are focusing on trade receivable finance. So gradually, I feel, if you my personal feeling, after 4 5 years, India's finance industry become as like a global, at par with global finance industry, where the dependency of the traditional finance, like what I was telling earlier, OD, CC, or the typical packing credit, that type of dependency of that type of product will come down, and of course the trade finance opportunity will go up, and we are going to sorry we are going to get the real advantage of the receivable finance opportunity in India in coming years.
Yeah, thanks, Parab. And I can sense that pride in your voice. And same goes for me also, that India Factoring was a major contributor when it comes to this particular aspect from IRDA guidelines. And Vinod is mentioning that IFFS has been a contributor to the guidelines framed by IRDA. It was a recognition of strength of IFFS in areas of factoring. Thank you so much, Vinod, for sharing that. And yes, both Param and I fully agree with this, and we have that sense of pride. So, Param, what I heard from you is this would become a game changer for us, and this would become a game changer for businesses, like you mentioned, small and medium businesses, and many more. And it would open up much more opportunities. And thank you for bringing up that amendment to Factoring Regulation Act as well, because that also going to add to overall business sentiment and overall how we were doing things in terms of domestic factoring. So, yes, good days ahead for businesses. Now, tell me this, Param, what are some of the good options, working capital options, and where do you see factoring playing a role?
So as I said, factoring is really a unique product. So there are multiple working capital products, of which there are few unique product factoring. For example, commodity funding, commodity related funding. These type of facilities are more or less unique product. So if you take, as per Indian regulators, anyone want to avail a secondary working capital limit, he has to take NOC from his primary working capital banker. So present scenario will take its own time, but factoring have big role here. Factoring is the only product, working capital product available in India without taking NOC from existing banker. Of course, the regulator has put robust control to manage that. So only thing we have to release the payment to the core working capital banker. So that is a major uniqueness of that. Suppose if you are a business person, you want to avail a secondary business for your immediate business growth, unless and until your banker gave NOC for that particular purpose, you cannot go to a secondary banker. So factoring is the only product available in India you can avail without NOC from existing banker. And factoring, if you ask me, factoring is actually not a loan at all. So it is actually how the business people is encashing their total business resources. So they are actually utilizing that receivable which has struck or which has due for after some times. They are encashing that receivables and utilizing that cash flow for their business growth. And it is, as we told, that product is not only help them for liquidity, it also help them for improving their efficiency in collection, overall collection activities, improving to get more insight about their buyers, credit worthiness and other things. And second thing, third thing, they will able to take larger orders because there is no need they have to block fund for their long-term credit period type of thing. So they get immediate money from a factor and they can use it for taking more orders. And overall, especially for export factoring, it'll include a lot of other futures actually. So it is totally credit protected. And here I would like to talk about again credit protection through a regulator factoring. So credit protection through a regulator factoring. If the client is exporter is going, he will able to get 100% credit risk protection from a factoring financial institution. So none of the international insurance company, or if you even take ECGC, they won't give 100% credit protection. So factoring is the only solution available for to offload your credit 100% credit risk, that to a financial institution, not to a direct insurance company. So if you are taking a normal credit insurance from open market, of course, in case of any claim or any such scenario happen, it is the exporter's responsibility to ensure that all the documents are intact and ensure that he has to follow it up with multiple level for get back that claim amount. It is not that much easy. But as far as factoring credit protection concerned, you are dealing with a financial institution and not dealing with an insurance company. So there is a clear cut clause in factoring agreement where we will settle the credit protection in case of any default or bankruptcy type of thing happen to the buyer. We will settle the claim within 120 days. So that never happen in the even normal in the insurance industry, it won't happen. So factoring, in addition to working capital facility, so it'll have multiple other features. So that knowledge was actually lacking for the business people in India. Now they have realized, especially now corporates and mid corporates are using these facilities very well compared to SME sector. Now SME sector also, that knowledge is improving, and they are really able to understand that the strength of other features of factoring product. So to conclude, factoring product help them to avail working capital, means cash flow, to address their immediate cash flow requirement. It will help them to protect their receivable risk. And third, it will help them to improve their overall collection efficiency. And fourth, it will help them to grow their profitability. So that is another advantage. Normally that people feel that we will able to make profit out of business alone. But according to me, if the company or if the business unit having a proper working capital management, they can actually make a profit out of that additional. They can add additional profit to the business. Why I am telling, especially for example, if you have blocked your receivable for 90 days or 120 days, and you are waiting for the payment after 120 days. I have seen some client, they will, though they don't have much requirement of liquidity, they will avail factoring facility and use this proceed for settling their payables, and they will take some better advantage by paying to their creditors. So, for example, instead of taking 60 days credit period or 30 days credit period, they will tell we can pay immediately, and you give cash discount for that. So they will be managing perfectly well, because through factoring product, I have seen some very disciplined corporate is making 2-3% of additional revenue to their business. So if this product, if that business people able to understand the real advantage of that factoring product, this product definitely help them to grow their business, grow their profitability, and offload their credit risk, as well as to improve their collection efficiency.
Thanks for explaining it so well, Param. And my key takeaway is you focus on your business and keep the rest for others. And there also you make money. So, what more can be done when it comes to a working capital product? So, it's not only that it's giving you money very early, it's also giving you credit protection when it comes to export and so many other benefits like Param cited. Thank you so much, Paran. I'm sure businesses are listening, and we have some comments. Chanchal says it's indeed a great product. Puneet says Factoring as a working capital or risk protection solution is a way forward, right, Puneet? And that's what Param explained in detail. Thanks for commenting, Puneet. And Vinod says, very well said, in two-factor arrangement, settlement is very smooth and it happens within 120 days. Other insurance arrangements, no fixed timeline for settlement. So, right, you rightly said, Param, that there is no, it's even better than the other insurance that we look at. And others might take extended timelines. So, thanks for throwing some light here. But here is a question. My business acumen tells me that factoring may be the best product. But what about cost? How is it going to cost me a bomb?
Yeah. So, as far as my experience in various working capital product, according to me, factoring is almost at par with other working capital product. If you take so most of the time, why in factoring, I'll before explaining that things, I'll come to the exact wherever what are the costs involved in factoring. Factoring, there is in interest applicable, rate of interest applicable for the amount they have drawn, utilized as like their working capital CC and OD account. And there will be some initial limit setup as like the bank charge limit setup fee. In addition to that, there is a cost called factoring cost. Of course, if their client is going for a bill discounting, bank will charge bill discounting charges, some smaller amount. Factoring costs actually include that bill handling charges. It includes the credit protection. Major chunk of that is credit protection cost. So if for client is going for an international factoring product, export factoring product, so factoring cost include the credit protection cost. So credit protection, again, the client may can compare this with ECGC. ECGC will be, for example, if CGC's credit cost is 0.16 percentage, the factoring credit cost may be 1.3 or 0.4 percentage. So again, there is a major difference in that. ECGC or ECGC cover only 80 to 90% of the receivable. Under factoring, it is you will get 100% credit protection. And again, it was credit protected by a financial institution based out of buyer's country. All reputed financial institution based out of buyer's country is absorbing the credit risk of the buyer. So that product is not at all available in banking. Suppose if they are going to bank, they will get only a working capital product where they can take loan and use it. So they won't get any value added service. If you compare that their rate of interest, loan rate of interest and factoring rate of interest, it is almost at par. For the additional service they are taking, the additional benefit or additional benefit what factoring product provide to the client, there will be an additional cost for that. For example, if for a simple example for an easy layman understanding, suppose if you are selecting for a hotel tariff, you will get 2-3 type of tariff. If you want no food, breakfast, nothing, so you'll get a cheaper price. If you opt for a complimentary breakfast, complimentary dinner, some pricing will be there because they are giving you complimentary breakfast and lunch, all other things. So of course the hotel has to charge you a little bit more. Like that, in factoring product, in addition to that loan borrowing cost, we will be providing credit protection, we will be giving collection service, we will be monitoring the buyer. They can totally offload their buyer's risk to the financial institution, and we will do all the collection monitoring mechanism. We will monitor, we will follow up the collection on due date, all these things. So if client calculate the real benefit of factoring, so we do deal with a very large corporate and very well reputed and externally well-rated client. So they calculate all these things and they use factoring product mainly because not only they want compare not only the rate of interest, they will compare other benefit, credit protection, collection efficiency, and prepayment help them to rotate, take more orders from their buyers, and it'll help them to settle their suppliers faster and take some advantage of that. If you understand the product really well, and if you are able to, the treasury or finance team is able to utilize all the benefit of factoring product, then it is almost at par with the banking facility, because this is not only a banking facility, it having added services. So added services cost, if they really understand and they compare with their real cost, so it is a far affordable pricing. And that is why, otherwise if you take the factoring product in India, the bigger corporates are using factoring product. Normally, if it is a very costly proposition, normally bigger corporate avoid such product. So if you take in India, predominantly corporate and mid corporate are using factoring product more compared to SME clients. So they are having a specific treasury team to calculate the real benefit. Unfortunately, the SME team, SME business unit don't have that separate treasury team or to manage such type of cost-effective calculation mechanism. So not that much major difference in overall cost. Um, According to me, it is more or less equal to their all other working capital products.
Thanks, Param. Thanks for clarifying that it's not going to cost a bomb. And Ravi said optimum cost structure on holistic basis is a major difference between factoring with India factoring and other banks and other fintechs and non-banks. So thanks, Ravi, for sharing that thought, and thanks, Param, for clarifying with a simple example that it's all about the services that you are getting, the quality that you are looking at, and this is all about credit protection as well. So it's not that you have to shell out so much amount. So thanks for that, Param. And though I would like to have a very long discussion with you, it's very interesting discussion, and I'm sure our listeners are also benefiting, but there is a time constraint, and I would like to know from you what would be your message to all businesses. You are a working capital expert. So, as an expert, what would be your message to businesses?
Oh, that is again great. Of course, working capital management is one of the key requirement for any business unit to improve their efficiency. Not only that liquidity efficiency I'm talking about, it is improving overall efficiency of the business, and it is required for their business growth also. So a proper working capital management is necessary for all growing business unit. And there are in the current finance world has totally changed. If you take today's India is a different India, and you have all the product available from various financial institutions. So there are multiple product, unique product like factoring or commodity funding. These type of unique products are there in the working capital basket. So these unique product actually designed for a unique purpose. For example, factoring is actually designed for the receivable optimization or receivable finance. So use such unique product available with you and experience that unique product and take advantage of these unique product. Most of these unique products are unsecured in nature. So experiment all these new product, and definitely it will help you to improve your liquidity, improve your overall financial discipline, and of course, it will definitely help you to grow your business. And options are many in India. All working capital options are many, and choose the right product suitable for your business line. That is the primary things the business people has to take care. That is my message, Gauri.
Thank you so much, Param. And this is the last thought I'm taking from Vinod before we say goodbye to you. So Vinod says that correspondent factors are ears and eyes for us, providing insight of local market. So that's an added advantage that you don't have to be an expert about that local market, and create confidence in doing business in the market where Indian businesses have limited visibility. So very well said, Vinod. And this is another aspect, important aspect when it comes to business, because I don't know law of the land. I have no, I mean, there can be uh, time zone differences. There can be so much different. We all know within the country also there is so much difference. We are a diverse country and we fully understand that so things are different from one market to another. So how about a different country? Things would definitely be different, and you have someone, you have an expertise there supporting you. So that's added advantage. Thanks for adding that, Vinod, and thank you so much, Param, for being with us and helping us right from the important value of integrity to what businesses should do as a working capital expert. Thank you so much for being with us.
Thank you, Gauri. My pleasure to join with you for this chat show. Thank you. Thank you.
Thank you. And here was Param, a working capital expert, sharing his thoughts about factoring and other working capital solutions. I'm sure you got benefited by it. And if you want to know about factoring, visit our website, or you can also visit our LinkedIn page where this live is, or our YouTube channel. Thank you so much. We will be back to you with another chat show. Till then, goodbye. Thank you.